The UK and London in particular is on everyone's shopping list.
Prime core assets are in strong demand.
That was the highest number of transactions we have on record.
It's certainly been a phenomenal year, biggest ever. London's been the most traded city in the world, I think for the third year running, and the UK was the most active investment market after the US. So that's some quite extraordinary statistics.
The most important was probably the relative performance of our economy compared to others around the world. As a developed market, we were one of the fastest growing.
As far as London's concerned, it's a very, very easy place to invest. If you talk to the global players, and many of them will say it's a very easy place to put your money. There's a lot of research, it's very easy to enter into the market. And I think that they like this political stability of the UK.
Market transparency is absolutely key, and it's one of the attractions of a market like the UK because of the coverage of people like CoStar, particularly international investors. When they come into a market like this, they want to be able to easily access information and see behind the numbers. They want to see the deals that are involved.
I think that level of transparency gives a lot of global investors a high degree of comfort.
We think urban intensification and the recovery of some cities outside of London and the southeast will be a trend that just really has started.
The UK regions, though, is where we've seen the most growth last year and over the last couple of years. I think activity in the UK regions was up 70%.
We've seen yield compression, and we've seen the weight of money that's been attracted to London now looking for, on the face of it, a more attractive yield in the regions. Selectively, we would certainly argue that there is better value to be found in the regions than London.
I think the relative value of the regions really depended on who you were as an investor. If you were an income investor, then certainly there was more to be had in the regions. Yields at the beginning of the year were less adjusted than we'd seen in London, so there was a margin there to go for.
We have a general election coming up. It's not for me to comment on the outcome, but clearly, as we approach that general election, I suspect some investors may either wait or see or be slightly nervous about its outcome.
As we come up to May, some investors will take a wait-and-see approach, but my sense is that it'll be another very busy year because there are factors which will outweigh that, such as the weight of money looking to come into this asset class given its attractions, and also the strength of the underlying economy.